All right, all right, all right. Welcome to Ask the Trader. Just waiting for more people to join. Just waiting for more people to join. All right, all right. So, if you have a question, I want you to go to the comment section. And when you go to the comment section, if you put a stock that is $1 billion or higher in market cap, I will analyze it later. All right. So I am waiting for more people to join. I'm gonna start as soon as someone, y'all know the method, right? Go to the comment section, tell me that you can hear me clearly, and then I can start. All right, because I'm looking at the comments right now. As soon as someone tells me that they can hear me clearly, I will go ahead and start. All right. So again, welcome to Ask the Trader. I am Joel Harrison. If you can hear me clearly, if you can go to the comment section and say I can hear you, I will go ahead and start. All right. So you guys can hear me clearly. Again, welcome to Ask the Trader. And today we're going to focus on what would Joel do mini classes. All right. So, when I do Ask the Trader, I pull up my charts, and so many people say, oh my God, this is so simple. This is so easy. Like, how can I go about trading and simplifying the market the way that you do? And so many people in the insider trading room uses the same tools that we use. So if you're able to use the same tools that we use, you're going to be able to follow along. A way that can speed up the process so that you guys can analyze these stocks within 1 minute, which is something that I teach. You're going to have to take some of my courses. All right. And that's what the What Would Joel Do mini classes. So again, I'm just waiting for a couple of more people to join because I decided yesterday to go ahead and I do this. I'm going to try to do this every week like I used to, especially during COVID. But golf season is over, so I have a lot of time on my hands. All right, so I'm going to try to do this every Thursday because on Fridays I usually go out with my buddies and play some course. So I'm going to try to do this every Thursday, 11 a.m. or 1 p.m. Depending on how I feel. But let's go ahead and get started. So the theme for today is using basic tools. I see so many people. This is our education season. And, as you guys start to trade and invest in the market, I see you guys getting a lot more complicated in the way that you guys are viewing the market. And what you should be doing, just like I do as a golfer or as an athlete, is you should be simplifying the way that you do things. All right. So that you can become a lot more consistent. I know that it takes about a year or two for most people to develop their strategy. So I get that. I went through that same process. It took me probably about, 500 to 700 days to kind of figure out what type of trader and investor I was. To be honest, I didn't even know the difference between trading and investing. All right. And that's something that I teach as well. Once you realize if you're trading or investing, you should be simplifying what you're doing. I see so many of you guys put your charts out. Now, this is the difference between me and you. When I put out a chart, I reach the masses. I can talk to day traders, investors. Everyone can look at my chart, and even if they've never used the chart, it's so simple. You guys can see exactly, what stock I'm buying. You can see if it's going up or down. Most of the time, you don't know what my goal is, but I can have a fifth grader look at my chart and kind of see what's happening. And that's why I even developed the What Would Joel Do method in the first place. I developed it so that a fifth grader and a 50, 60, or 70-year-old can look at the same chart. They can analyze a stock within minutes and kind of know, depending on your goal, what to do. And what I'm also seeing a lot of is, because this is education season, there's so many different educators and teachers and wannabe traders and investors that are coming out the woodworks, because AI is taking over a lot of people's jobs, and you guys are trying to figure out ways to generate income, right? And I'm a unicorn. I'm a gem because I was there in the beginning. All right, I was pretty much by myself, teaching myself the market when nobody even knew what Invest Tools was, when nobody even knew what Thinkorswim was, way back in the day. And it's funny that way back in the day was 2007 and 2008, right? That tells you how old I am. So back in 2007 and 2008, when the real estate market started to crash and people had to really generate income, including myself, that's how I was able to learn the stock market. And since none of my buddies was involved in it, I pretty much was the beginning of it all. I was there in the beginning. Now people been trading and investing forever. So, but AI is new. Technical trading is fairly new. And that's why a lot of us didn't learn it in college. We learned what stocks were. We kind of knew what options were, but nobody except the rich of the rich were using the technical side of the market. So a lot of you guys are pioneers in your own family, just being able to pull up a chart, look at its 200-day moving average, know the bias, and so forth. So because I was there in the beginning, I felt the need to be able to teach people the correct way of doing it, because so many people come into it and then they'll read a book for a month or two, and then all of a sudden they are an advanced teacher in that particular subject. So, I rant a lot about that, vetting the people that you guys are learning from. All right, so we got enough people on board. Let me go ahead and get started. Let me take my mug off. All right. So again, the theme of today is using basic tools, and that's why I became so popular in this particular space, because of my way of simplifying this complicated thing that we call the stock market. So the theme is, what would Joel do mini classes? So I'm just going to be brief on it because I want to spend a lot of time analyzing you guys' stock, right? But a lot of you guys didn't know. First, you don't know that much about me, and you don't know what I have to offer. So I am a full-time day trader and investor. I am an expert in stocks, options, futures, and cryptocurrency, and I have over 15 years, probably longer, and over 30,000 hours of trading and investing experience. That's what you get with me. And I still do it day to day. I look at the market. I probably look at the market probably 6 to 7 hours a day. All right. Even when I'm on the golf course, a lot of my friends get pissed off because even when I'm on the golf course, I put up my little speaker, the loudest thing that I can actually hear, so that even when I walk 30 steps from my cart, I can hear what's going on in the market. I can hear if there's breaking news. I'm letting that information come into me. And that's why I'm so in tune with what's happening with the market. And that's what you get with me. But I'm also investing at the same time. So I'm investing, I'm trading, I'm doing futures, stocks, options, and crypto. So because I am an expert in all of these different fields, I broke down the market in its most simplistic way so that a fifth grader could understand these different areas of the market. So let's talk about a lot of freebies, all right? Because you guys love spending money. I mean, y'all come to me, Joel, I want to give you money to do this. And Joel, I got this type of money. And I'm like, guys, y'all realize that I trade, you know, very large accounts in my own family, right? I don't want y'all's money. Unless you can come to me with $10 billion, I don't want, and I don't want to be an asshole, but I don't want your $10,000 or your $20,000 or your $50,000 or your $100,000, even your $1,000,000, right? Because we got that, right? Unless you're able to unless you can come with some really, really large numbers, quit asking me to trade your money. I'm not going to do it. I don't need it. All right. I have my own money. All right. I created my classes so that you guys can do it on your own. That's the whole reason why the What Would Joel Do method was created. So you can do it, not so Joel can do it. All right. I know I have a lot of insight on the market. So what I provide for free is what you guys should be doing on your own, right? You should come into the inside, and we're going to talk about it later. You should come inside the insider trading room. So I'm going to show you guys a couple of places where you can go that's free, that you don't have to pay any money for. One is Yahoo Finance. Every single person on this call should have Yahoo Finance, because when I pull up Apple, I can break down Apple really quickly. It's a $3.7 trillion uh, company. Its PE ratio is 38. It's 38. I don't have my glasses on right now. The beta is 1.1, right? And then in my videos, I kind of break down what these items are, so that when you see this, you immediately are like, all right, it's a $252 stock. It's $3.7 trillion in size. Most of you guys have been in the market for 20 years and still don't know what a market cap is, and you still buying stocks based off of its stock price. Whereas everybody else has moved on and have decided, we don't care about a stock price. I don't care if Apple was $25,000 a share. If I want to buy some Apple, I can go to, I can buy fractions of Apple. I can buy $100 worth of Apple. I can buy $10 worth of Apple. I can buy $10,000 worth of Apple. Quit looking at the stock price. It's an illusion. I've been telling y'all this for years. All right. And that's what you get in my one-on-one consultations, right? But you should be able to look at Apple, break it down. This is free. Yahoo Finance is free. I don't know why you guys are paying memberships for charts. It's because y'all want to spend money. And I'm trying to teach you guys how to not spend money, so that you can use those funds to start creating wealth with. All right. Secondly, everybody on this call, especially if you're involved in the stock market, should have a Chat GPT account or some type of AI account. Because if you're still using Google search or Yahoo search, it's like dial up compared to the information that you can get now. And even some of you guys that think you're all into tech, you're missing out on a lot of information. I'll say that. And not only are you missing out on information, if you have a small business or a business, you guys should be creating your own GPTs on top of it. So a year ago, I created Ask Joel GPT for you guys for the stock market. It specializes in stocks. Yes, you can go to Chat GPT and ask it 100,000 questions. But when you go to my GPT, you have access to the tools that I use. All right. And you can find it through Explore GPTs, and all of this is free. Now, there is a $20 membership for if you want to get advanced on Chat GPT. I encourage people to pay it, especially if you're willing to pay. Y'all will pay $20,000 for a class, but you won't pay $20 for a Chat GPT subscription. That's just how this is just how people are. All right. The What Would Joel Do app is free. I talk about this in every episode, right? You can go to the What Would Joel Do app. You can download my app, and through the app, you can find all of these different places. Now, there is a subscription service if you want to watch videos or if you want to get alerts. Another free place that you guys are not capitalizing on is my page on YouTube, which is also, you can find me as What Would Joel Do. I tried to keep it as simple, and because of Joel, I can't find you on YouTube. I'm like, now my business is What Would Joel Do. Did you try What Would Joel Do? Oh, I'm just typing in Joel Harrison. All right, What Would Joel Do? You can find me on anything out there just by typing What Would Joel Do. All right, whether it's YouTube, whether it's LinkedIn, whether it's Instagram, whether it's TikTok, whether it's Blue Sky, whether it's, I'm not on X anymore, But any social media platform that's out there, if you type what would Joel do, you're going to find me. And I'm going to have a bunch of free stuff on there, including what we're going to do today. All right. And yeah, I'm not getting millions of views like anyone else, like everybody else. But that, I got over 700 subscribers. So there's 20,000 people in the Insider Trading Room. There's no reason why I shouldn't have at least 10,000 subscribers, especially with all the free information that I give you. Y'all can give just a little bit, just a little bit. I promise it will come back. All right. The Insider Trading Room. If you're watching this on YouTube, if you're watching this on LinkedIn, all right. Insider Trading Room was literally one of the first groups, stock groups ever created when Facebook started doing groups. This room has been around since 2011, people. 2011, when I used to get 2 likes on every post. Every post, I would get 1 or 2 likes, right? Trying to explain this stock market thing. And then because we were there in the beginning, it started to snowball. And of course, we got modest numbers, 33,000 members over the years. All right. But a lot of you guys are missing out on the free content. Yes, there's a lot of free posts that we put out there. But if you go to the featured tab, you're going to find all of these live videos that I've done. All right. Anything that I put out there, any of my posts that I thought was important, you're going to be able to find it in the featured section that you guys are not taking advantage of. This is all free. Free. Joel, you ain't tell me about that stock that you bought. Yes, I did, because I showed you a receipt on it 6 months ago. And now 6 months later, you want to buy it at the highs when I'm selling it. All right. Guys, I'm one of the best that's out there. And I can say that because of all there is no stock. I can name 15 stocks this year you would have made over 100% on if you had just been following the post. Like 100% is nothing to me. I'm trying to get 10,000% returns now. 1,000% is not even that much to me anymore. We're talking about just stock movement. We're not talking about options. All right. My sons have over, 500% in some of their stock investments. All right. So take advantage of the free information. Charles Schwab. Now, I'm not even getting paid by Charles Schwab to show you guys this. All right. This is where you're going to find the Thinkorswim platform. All right. If you open up an account, you're going to get free access to everything that I'm showing you guys today. And it's not a monthly subscription. Okay. Anything that I show you guys today. And guys, my charts is one of the most beautiful, most clean charts you're ever going to see. This is where I'm doing it. All right. If you don't want to go here, you can go to I don't know why my brain just went blank. But there's other places that you guys can go to. Somebody put it in the chat. The other two, TradeStation or TradeView is also where you guys can go. All right, Calendly.com. Now, it's only $50, right? Some of you guys are out here paying $20,000 for an options class. But the smart people that are in the room are saying, well, why would I pay $20,000 over here when I can just book a session with Joel and pick his brain, and I can learn options, I can learn futures, I can learn crypto, I can learn anything that I want in life for $50 from somebody who literally produces receipts on not just a monthly or quarterly basis, on a weekly basis. I understand why I'm in the top 1%, because 1% is supposed to make all the money. Y'all are supposed to go out there. If you're not in the top 1%, you're supposed to be out there spending money frivolously on silly stuff and silly classes, because you're not supposed to make all the money that are out there. But the 1%ers, the people that are intelligent and are like, hold up, this guy's been trading the market since the beginning. He breaks down everything. He teaches everybody from 5th graders to adults. He shows his receipts on a weekly basis. but I ain't gonna take his classes because he's condescending and he thinks he knows everything and he named himself What Would Joe Do? Okay, so then go out there and spend $20,000. All right. And then he makes me feel bad because I spent all this money on it. I'm gonna get my money's worth out of this class. Shoot, I know I spent a lot of money, but I'm gonna get every dollar out of it. Okay. Guys, I've been there, done that. Anything that I laugh about or talk about in the room, I've done it. Y'all think that I'm above everything. I've done any and everything. Because remember, I was there in the beginning. I didn't have anybody to come and say, Joel, don't take that $10,000 options class, you know. But I was there. I was in a room. I went to a $300 course, and they always sell you that way. They reel you in with the 250 or 300. I went to Indiana, took an Invest Tools class. I tell this story all the time. Went to Indiana, had to buy a plane ticket there. It was snowing. I had to borrow my mother-in-law's car. Drove to this Invest Tools event. It was 3 days. It was wonderful. For 3 days, I learned support, resistance, trend lines. I was like, this is the best $250 I've ever spent. I felt so good about myself. Then on the third day, these agents, they look like FBI agents, came in with suits on. See, the first couple of days, everybody had on casual wear. Then all of a sudden, these suits came in. And I was like, oh my God, the Men in Black is here. And it was only like maybe 15 or 20 people in that particular class. I was the only young black person in that class. All right. And then on the last day, like 15 minutes before it ended, they were like, all right, guys, we showed you guys this. But what if you were in this special group that nobody knows about, that you're going to learn stuff that nobody in the world knows about, right? It's going to cost you $10,000. Now, at the time, I had money, right? And I didn't really want to pay it because I was like, man, they seem legitimate because I just spent 3 days with them. But what they were doing was grooming me for 3 days. And then on that third day, $10,000 I paid for that class. All I got was 4 CDs, 4 DVDs. No teacher, no educator, just 4 DVDs. Figure this out. And I was on my way. It was an options class. And I tell this story all the freaking time so that you guys won't get duped as well. All right. So, it's important to me that I tell these real stories because I hear horror stories all the time. And I'm like, I know I've been there. I've done that. And I'm a protector. I was a lifeguard, which was my first job ever. So, I don't like seeing people get duped over all of these expensive courses that are out there. So I spend a lot of time here because when I do these one-on-one consultations, that's me and you asking me anything you want, anything about my portfolio, anything you want in life during that hour. And I always felt like it was, if you wanted to pick my brain or pick your friend's brain on some business deal, you'll say, hey, let me have lunch with you. Right. And then when you have lunch with that individual, how much is lunch? Lunch is usually going to cost about $50 to $100 these days. So I figure, if you take me out to lunch, I should be able to at least play a round of golf. That's where I came up with the cost of this one-on-one consultation. The least you can do is, if I'm going to give you all the secrets that at least I know, I can go out there and I can play a round of golf. All right. So last thing, because I'm not going to spend a lot of time today like I did last time. All right. Payhip.com. A lot of you guys don't know about this. I love this because I didn't create this page, but if you go to payhip.com/whatwouldjoeldo, this is the most popular. This is probably the most popular product in the insider trading room by far. Thousands of people have bought this, right? And it's just so that you guys' charts can look like mine. Now, I know when I put out there, you can make your charts look like mine, and I'm starting to understand the way people view me now, right? And that's just my fault, right? You know, if I'm sitting here educating and say, and my name is What Would Joel Do, and this, that, and the other, and then I go out there and say, you want your charts to look like mine. They're like, why should my charts look like yours, Joel? Like, who are you? Like, I'm starting to understand that's how some people view me, right? So I need to change my wording so that it's, you know, do you want your charts to, I don't even know what to say. Somebody put in the comment section, what can I say that won't be so, you know, about me, right? You know, do you want your charts to look nice? Do you want your charts to be clear? Do you want your charts to be concise? I don't know what to put not to offend some of you guys or for you guys to like me or not like me. But dang it, you know what I'm saying? I have some of the like let's be honest, my charts are probably one of the most beautiful charts y'all have ever seen and clean. And if you want them to look like mine, right? You can pay for this course. Or what some people do is they'll book a one-on-one consultation with me. Now, I'm saving you money by doing it because if you book a consultation with me, it's going to take 2 hours for me to help you with your chart. So it's going to cost you like $100. So you can do it on your own. Guys, I don't even care if you know, buy this and then share it with everybody in your family, right? This video is yours forever so that you can at least go through Thinkorswim and you can go through each section and all the indicators that I use that I believe are the best basic indicators that are out there to invest and trade. You'll be able to set them up. I have people that come to me all the time, two years later, 3 years later, and they're like, Joel, I lost all of my, you know, I put all the stuff in my Thinkorswim. I went and got this job. I stopped trading and investing, and I came back. And sure enough, I was able to look at your video and I was able to set my charts up again. And I'm like, great, that's why I created it, so that you guys can see the market as easy as I see the market and not complicate things. All right, cool. So I got that out the way. That was the first 30 minutes. But before we go, I want you guys to, hold on, let me make sure I push the right button. Here we go. So let's go to Ask Joel GPT. Before I take you guys to payhip.com/what would Joel do, I wanted to show you guys a couple of things and what you're missing out on. All right, so on ChatGPT, I pretty much asked it because people ask me all the time, Joel, where do you come up with the prices for your courses? And I always want to be fair. I always tell people I'm the Costco of classes or education, right? I don't want to be too cheap because I know my worth, but I don't want to try to take you to the well just so I can, just because you're ignorant, right? I always want to be fair. So if you go to ChatGPT, if you have ChatGPT, like just literally, we had bats in our attic. We got a quote to remove the bats. We had 24 bats in our attic, guys. 24. I thought there was a leak in my ceiling. I pulled the attic down. I went up in my attic. I looked to the left and I was shocked. I counted 20 something bats in my attic. Now, we had a removal company come. And when the removal company came, they gave us a quote. Now, nowadays, you know, if I didn't know any other companies, which like that's not a normal thing for a critter company to come to you and give you a quote, right? I don't just have friends that get quotes on removing stuff in their house. So we got that quote. And then I immediately put that quote in ChatGPT and I said, hey, is this normal? Is this fair? Is this price fair? And sure enough, the quote that came in was right smack dab exactly what they should be charging for the removal and any other items we have in the house. Well, the same thing here. You know, if you're taking a course, I put right here, how much should I charge for a futures or an options class, and what are the average prices? All right, guys, grammar is not my number one thing. So if I missed a comma or a period, I apologize. I do know numbers, though. I am a numbers guy. So ChatGPT said, that's a great question. There's no one correct price, but you can use market data plus value-based pricing to land on a fair competitive number. Below, I'll walk through what the averages are for futures, options, and trading education more broadly and how to decide what you should charge. Now, here it says, a basic online futures course shouldn't cost you no more than $200. You know, an intermediate course should maybe be around, maybe 200 to 1,000. High-end mentorship and live coaching premium access should roughly be around 1,000 to 3,000 bucks, right? Subscription services on average are about $100 to $300 a month for live trading schools. All right. So you got mini or micro courses, which is what I offer. Mini or micro courses should be in between, anywhere from 47 to 150 bucks, right? So as a specific example, if you're taking a beginner futures course, you should be paying somewhere around $200 and $3,000 if you have a live instructor and you guys are there like constantly, right? So these $20,000 courses from people y'all ain't never heard of, it's ridiculous, right? And I follow a lot of reputable people like Kramer, like Motley Fool, and I kind of price my stuff according to kind of what they're doing, right? So I know what's fair, I know what's ridiculous, I know what's cheap, right? I'm right there smack dab in the middle of it, right? Because I don't think my stuff is shabby, and I'm definitely not going to charge you guys an arm and a leg because I don't need it, right? So if you were to go to my PayHip page, which a lot of you guys don't know about, payhip.com/whatwoulDJoel do, you guys are going to see a whole bunch of courses that I have there. And I put a bunch of bundle packages there as well, right? The Thinkorswim chart setup video, which is 2.5 hours long, it's 50 bucks. It's by far the most popular product in the insider trading room and probably any other room, all right, because of how valuable it is, right? I created the 9 to 5 method for you 9 to 5 people that are out there. 75 bucks, right? Beta and volatility, if you don't know anything about it, 50, 75. Beginner stock market package, which includes about 4 or 5 videos, right? 250 bucks, right? A lot of you guys are out here paying $20,000 for an options class, and I got it's a beginner's options class with some intermediate characteristics to it, $400, right? So what I always tell people to do is before you go out and you take these super duper expensive courses, come to the Costco of classes first. Even if you have a son or daughter or friend that's interested in it, send them to me first. Buy these courses, learn the fundamentals and the basics because you're learning it from somebody who actually knows what he's doing. And then if you decide you want to go advance and you want to pay, what most people pay at an Ivy League school for one semester, then go ahead and do it. All right, but I ain't going to do it, right? I did it in the beginning. I got duped. I said I'm never going to do that again. All right, and I made sure of that. And I always made sure that everything that I did was fair. I even have an ultimate everything package where you learn options, stocks, futures, crypto, everything better than anybody I think that's out there. And you get everything, the 9 to 5 method, the 513 crossover, everything that I offer, beta volatility for $5.99, and you guys are not paying it. It is driving me crazy because I'm like, okay, you rather go this route and do this anyway. I can argue about myself all day, every day, but I always feel like, dang, there's a lot of people that I rub elbows with that are professionals and they're still spending money that they shouldn't be spending. And I can't just come to your house and knock on your door and say, you're going to take this because this is what's going to make you money, right? There's a reason why there's, 10% of the world owns 90% of it. Maybe you just ain't part of that 10%. All right. I've been a 10%er my whole life, whether you like me or not. In everything that I do, that's my goal. I want to be the best. If there's 10 people in the room, I want to be the top 2. If I'm on the golf course, I'm trying to be the top 2. I know every now and then I might not be the best, but I want to be in that top tier in everything that I do. All right, even the way that I educate. All right. So let's go ahead and get to you guys as stocks. Just wanted to put that out there so that when you see things, y'all just don't know any better, right? So you might see my course and might think, oh, it's cheap, so it must not have what I need. Where when you go on Chat GPT, it tells you I'm in line with some of the best courses that are out there. Anything that's above that is kind of trying to, in my opinion, dupe you for your money because you don't know any better, right? So I'm trying to teach you guys how to use certain tools out there so that you can be better, more frugal. You want to get the most money, the most bang for your buck. All right, cool. So let's go ahead and get started. Let's get to these charts. Let me take my let me take this banner off, and let's go to a normal banner. Let's go gray. All right. And let me move my picture down to the bottom so that you guys can see a lot of the screen. And let's get to some of you guys. Actually, no, I'm a little vain. Let me at least be in the middle. All right. And let me get to you guys' questions. All right. Got a lot of activity right now. Jason Up said, good morning. Good morning. Y'all need to thank Jason Epps. He's out there. Well, I guess I can't reveal what city he's in, but he's out there, protecting the country. And every now and then I might get a call where I'll see some missiles or something go off, and I get really worried. So I'll make a call. He's like 13, 14 hours ahead of us. So for him to be on this particular call, I think it's like what, 8 or 9 o'clock where you are right now. That's pretty big. So it's interesting that you're saying good morning. What's going on? What's going on? What is that? Oh, y'all know I don't have my glasses on today. All right. So head that's Howard University. She says my investment is on cloud. All right, so let's look at on cloud real quick. So on cloud is one of my actually, this is a stock that I put you guys onto. Nobody put y'all on the on but me. All right, so on holdings. Now let me tell you guys a story about on. All right, on is, if you go to the airport, if you go anywhere right now, you're going to see everybody with these shoes on, and it's kind of funny because most people, the name of the company is On, but when you look at the shoes, it looks like a ON or a OC, so nobody knows if it's On Cloud or On, right? And my brother always argues with me because he was an ambassador with this particular company, which is why I even know about it. He's a triathlete. He was using these shoes in the beginning, and he was like, Joel, this is the most comfortable shoe I've ever had in my life. I can go to sleep in any one of their shoes, and it's like the shoe is not even on my foot. So he would get free shoes like all the time. And it's funny because I'm the older brother, but he would give me his hand-me-downs. And sure enough, I was like, man, these shoes are ridiculous. So the first time I saw that they were publicly traded, I started to buy them. And I've been buying this company for years. If you notice, all the way back here from 2022, this company went from $15 a share or $16 a share all the way to $64 a share. And I've been telling you guys about this shoe for years. All right. So it's interesting to see that you're in this particular company. Now, what I don't like about this chart is that we have what we call a head and shoulders pattern. We hit an all-time high at 64. We dropped all the way back down to 34. And then we rose this year back close to 64, but we couldn't break to a new high. All right. It's kind of like somebody dunking and then they tried to dunk again right here and they missed the rim. Anytime you see that, because anytime you hit an all-time high, you're supposed to hit an all-time high again. But in this particular case, we got close to the all-time highs and then we started to go lower. All right. I don't like that. All right. Let's look at what's going on the 200-day moving average. Now, last week, if you watched the video, I explained to you guys how we use the 200-day moving average as bias. Well, the 200-day moving average is starting to angle down. That's not good, guys, because usually when a 200-day moving average angles down, you don't want to be around. Now, if it's an investment and it's 5, 10, 15 years, stay in it, right? But if you're trading it, you're probably going to get some short-term moves to the, short-term move to the downside. All right, now we did get a 513 cross right here, which is bullish, but it looks like it's about to turn back around. When the 200-day is angled down, the best moves are to the downside. All right, that's what you learn in the What Would Joel Do method. CeeLo, another Howard University grad, says, still ranting, I see. CeeLo had to stop showing his receipts in the room because y'all start hating on him. And I was like, CeeLo, man, like he was like, dude, I can't even show, parts of my portfolio because you got these insecure cats coming in here talking about some of the stuff I'm sharing with you guys. And it's interesting, like, how are you guys beating up on the people that are showing you what they're buying? Like, that makes no sense to me, but that's just how humans are sometimes, right? I ain't got it, so why he gotta show it? Oh, he just trying to show what he got in his account. And I'm like, first of all, that ain't even everything. I don't mean to put your business out there, CeeLo, but I'm like, that ain't even close to what he has that's out there. And y'all tripping off that? If y'all really knew what that cat had, y'all would really hate on that dude, right? So I try to, the people in the room that I know, have a little bit of something, they hit me up on my inbox and they're like, they share stuff with me now, but I'm like, I want them to share it with you guys. So I'm trying to encourage them to, I'm callous to all the negativity. I'm good with it, right? So it doesn't really hurt me. For years, y'all been coming at me. So I'm trying to teach them how to be more callous because they don't realize that by doing that, you might get a couple of haters, but in the end, because you're sharing that information, you're going to get that back tenfold, especially if you're telling people what you own, that made that portfolio do what it does. So anyway, it sucks that cats like that got to get a lot of hate. And then he said, whatever the case, Joel taught me the game and I've made hundreds of thousands since 2020. I didn't even know that that was coming next. So I appreciate that, brother. All right. This says, I relate to this so hard. Same thing happens with real estate investing, a scam. Yeah, there's a lot of real estate classes. And I did the same thing, guys. Like back in the day, I didn't know any better, right? So I would see these courses that were out there and they were charging these ridiculous amounts of money. And we're going to fly you in on a helicopter to this island. And you always feel like, it takes money to make money. It takes money to make money. And then you realize that you're just getting scammed, right? You're just getting scammed. And what they're doing is just making money off of your, like, just do the numbers, right? If I had a $10,000 class, let's just keep it simple, right? If I had a $10,000 class, all I got to do is sell 10 students and I make 100 grand, right? 100 grand to most people can change their lives, right? I've been making 100 grand, or our family's been making over 100 grand for so long that it's a big number, but it's not a number that we can live off of, right? But for some people, normal jobs that are out there, you have to go to work 9 to 5. You got to go in there and you got to clock in and you got to clock out. And you mean to tell me I can just create a class and some dummy is going to pay 15, $20,000? Why wouldn't I do that if I need money? And then in the end, your mindset is, oh, after I make the money, then I'll give back, right? But most of the time, if you're a thief or a crook, you're gonna figure out how to try to make even more money, right? So just be careful, guys, when you go out there and you decide that you want to take something. I get it if it's a educational school, like you're going to Harvard, you're going to Howard. Howard costs $50,000 a year, or maybe it's more than that now to attend. So for you guys paying $20,000 for a class, y'all think that that's equal to a Howard University education? I got a degree from Howard, right? I just don't. It just doesn't make any sense to me, and that's why I pull up Chat GPT and I fact check, and I'm like, how much should this course actually cost? With what I'm getting and what this teacher is offering, is it worth this amount of money? And you can ask Chat GPT anything, and how does this relate to the best courses? Look for the people that are on TV. How much is their stuff, right? You guys got to get a lot more smarter about how you guys not only approach the market, because it carries over in every other business and aspect of your life, right? And because the cost of everything, inflation and everything is starting to go up, you guys got to really know what the real numbers are that's out there. Marisol says, there are no dates in September or October showing on your calendar. Yes. So anybody trying to do a one-on-one consultation now or October, there's none available because I get booked out really, really quickly. All right. So I am going to leave some open for November, December, and January. All right. So I closed them off. So there should be some soon. All right. So that everybody can have aspect. Because some people are just going there, and I'm gonna be honest with you, they'll book 7, 8, 9 classes consultations for them, and then they'll book some for their family members and then for their kids. And they're just being smart. They're like, I want all this guy's time, right? Nobody out there is doing what he's doing for this price at the level of understanding of the market. So I get it. They're smart, they're intelligent, they're going after it. So what I tried to do was I tried to offer you guys as my courses so that you can still be able to learn it, because a lot of the times in the course I'm explaining to you the same exact thing. I'm very, very consistent. I have to be, as a golfer, as a swimmer. I had to be consistent and efficient in order to rise to the top, and it carries over in the way that I create my classes. And they're simple and basic. You're going to look at it and be like, dang, is this Minecraft? is this Minecraft that I'm looking at? But there's a reason why Minecraft became one of the biggest video games ever in history. We didn't understand because as adults, we complicate things so much. We didn't really understand the foundation of what was being created through AI and everything that we see now that our kids were able to grasp onto. All right. Oh, Chris Walker says, do I have to book a consultation if we if we grew up together? Yeah, you always got to book a consultation. All right. Or like I said, you can just hit me up and I can do my consultation on the golf course. You're hilarious. Uh Chester says, do you want your charts to be more effective for you? Right. If you want your charts to be more effective, simplify it. Quit adding things on your charts. You guys are using indicators like training wheels. Like, you're so afraid of the market, you think that more information is going to make you more money. Do y'all know that the market can go up or down depending on if Trump comes out and tweets something, if Elon comes out and tweets something, if anybody comes out and tweets something? The market is emotional. It's going to go up or down depending, because it's a living, breathing thing, right? Just like humans are. But in the long run, right, we're using the charts so that we can overcome those emotions. The more information that you put on your charts, the more combinations you have. The more combinations you have, the more likely you're going to get you're not going to be able to buy when you're supposed to buy or sell when you're supposed to sell. You're going to get paralysis of analysis. I tell people that all the time. When I'm teaching people how to swim or when I'm teaching people how to play golf, I never tell them everything that's in my head, because if I did that, they won't even be able to hit the ball. Have y'all ever been hitting something very well, like hitting a golf ball or doing something really well, and then this complicated individual comes to you that thinks they know everything, and then they start messing up everything that you were doing naturally, and then at the end of the session you end up being worse than when you first started. I see that happen all the time when you overcomplicate things. And overcomplication usually comes with overcomplicated classes that cost ridiculous amounts of money. You guys go in there, you take these courses, then you come out and you end up booking consultations with me because you're like, can you break down all of this stuff that this educator was teaching me? Because I don't get it. They get it. I don't get it. And then in the long run, you didn't even need it in the first place, right? So, I'm all about simplification. Andrew said, "What up, Jay?" I don't have my glasses on, so it's really hard for me to read this. All right. All right. This says, I think you just said the verbiage that may be less offensive to some people to make your charts as clean and easy to read as mine are. Yeah, but even if I say it that particular way, it's still yo charts. It's what would Joel do charts? I want my own charts. Who says yo Joel? You ain't invent the charts. Why you making it your own, guys? This is the type of stuff I be getting in my inbox. It's hilarious. I used to get mad and offended at first, and then I just started laughing because everything in life is funny to me. Like everything, like any and everything is a joke to me because I'm secure in myself. I'm secure. I'm an older middle-aged man. I've accomplished some things in my life, and nobody can take any of those things away from me, right? I can have all my golfers talk as much crap as they want about me, but then I look to my right and I see, hey, you the Atlanta Tour champion. So I don't care what they got to say. I put in the work, I got that, right? I have these educators that can say, Joe, your methodology and this, that, and the other ain't crap. You know what I'm saying? But then I look at my portfolios. I look at my family's portfolios. I look at my kids' portfolios. I look at my friends and family's portfolios. And I say, yeah, but why is everybody else making money, right? It's those type of testimonials that give me the security to for me to just be who I am, right? I'm going to be who I am, right? I'm not going to try to be somebody else. I come on here and I try to, this is what you get, right? We go to the golf course, we're going to laugh. We go to a seminar, I'm going to laugh with you. We're going to go to real estate, this, that, and the other. Most of the time I'm joking and I'm laughing, right? Because life is great. Life is short. You know what I'm saying? But what I've learned to do is I don't complicate anything anymore, right? It's either this or that, right? You can't really get offended by it. Even when I do the one-on-one consultations, I can see people getting angrier, about, and that's just a security thing, right? I try to be as blunt and as clear as I possibly can to try to help you get over that particular hump so that you can start being profitable. Aaron said, oh, hold on. Uh-oh. Aaron said MP4 swing trade. And all right, let's look at MP first because I don't have on my glasses. I know I'm gonna keep saying that. MP for a swing trade. Now, as a swing trade can be 11 months long, right? So I'm just going to assume that swing trade is maybe, I don't know, a couple of weeks, right? So I'm going to always pull up the universal chart, which is the day chart. And even as a swing trade, I would tell you, well, you're 1, 2, 3, 4, 5, 6, 7, 8, 9 days late. If you take my 513 crossover video class, or if you take my 9 to 5 method class, you're going to learn that I look for 10 candle trends. 10 candle trends is what you're going to find. It's not going to always be 10, right? But for the most part, when a stock starts to, if you're a swing trader and you've been trying to make money this whole time, just know that on average, when a stock starts to go up in price, if it's biased to go up, you're going to be able to make money for about 10 days. Most of you guys don't know what day that is because you don't know how to pull up charts. That's how I can come in here and say, oh, 1, 2, 3, 4, 5, 6, 7, 8, 9. That trend's probably about to be over. And they're like, oh my God, Joel, how did you know? You're like, you got an hourglass, you got a third eye. And I'm like, no, I can count. I can count to 10. As long as I can count to 10, if it starts to trend to the upside, I kind of know about how much money I can make. You don't believe me? Let's go back and look. When it hit the 200-day moving average, 1, 2, 3, 4, 5, 6, 7, then it dropped. Then 1, 2, 3, 4, 5, 6, 7, 8, 9, then it started to drop. Then right here, 1, 2, 3, 4, 5, 6, 7, and then it started to go sideways about the 10th day. 1, 2, 3, 4, 5, 6, 7, and it went sideways. So what's the common denominator? Y'all see how I broke that down and it ain't even been 20 seconds yet? If I was trading MP to the upside, I'm looking for 7-day trends. Bam. You guys don't even know how to do this. Y'all going to pull up 15 indicators. This is how y'all trade. You're going to look at the day chart, the week chart, the month chart, because y'all learn from these guys that said, hey, when all of these charts are all in sync, it's like Voltron, and now you have the power to go up. And I'm like, what are you freaking talking about? I use one chart with barely anything on it, and I promise you I will trade better consistently. Every now and then somebody's going to beat me. It's just like on a golf course, right? Somebody's going to get par, somebody's going to get birdie. I'm not going to win every hole, but after 18 holes, let's add up our scores and see who has the lowest score. Just because you beat me today or you got a higher percentage doesn't make you a better trader than me. It just means that that day you might have got lucky. But if you consistently trade with me, I'm going to start moving ahead of you. And that's not me being cocky. That's just me showing y'all how quickly I'm able to break something down versus you spending more time. And I'm not saying you, Aaron. Again, anytime I start breaking down a chart, it's not the individual I'm going after. It's, remember, I do consultations all the time, right? So I kind of know what you guys are dealing with mentally. But you guys are not doing this. I can look at this chart and see 7, 7, 7, 7. So if I was to ever trade this to the upside, I'm going to go up for 7 days. So 1, 2, 3, 4, 5, 6, 7. You should have been selling. And that's exactly what these people are doing. And that's exactly what computers are doing. That's exactly what AI is doing. AI is figuring this stuff out and it's trading these accounts that are out there. We manually have to do it, but I like to do the manual side of it because it starts to make you understand how to trade. You know, you find that bias, you find that trigger, you know how long you want to be in it, right? So that's MP. Let's look for, oh, it says a 1-year trade. My bad. So it does say MP for a swing trade and 1-year plus trade Disney for a swing trade. And dude, now Aaron, now you know, now I am getting on you, Aaron. One stock at a time. There's hundreds of you guys on this particular call. So in the future, buddy, one stock. All right, but I'm gonna look at Disney for you. Disney and SMCI. So Disney, guys, is getting a lot of play because of the Jimmy Kimmel situation. All right. So the 200-day moving average here is kind of flat. Disney came from $203. I would be neutral on this particular trade. Now, what you have going for you that I like is you have what we call a bottoming out period. So if you notice way back here in April, and I'm going to take your picture down, Aaron, way down here in April, looks like, hold on, this was April of 2022. April of 2022, Disney has been bottoming out. It cannot break, it looks like $76. So it's been flirting, it's dropped in price. It can't get lower than 76. And it looks like that's the floor. We call that support. So if I was to buy Disney right now for $113 a share, in my opinion, I would say, all right, as long as it doesn't break $80, if I'm going to hold this for over a year, then even if it dropped from $100 to 80, how much is it going to lose? Well, I'm going to be down 29%, right? If you can stomach a 30% drop in Disney, buy it here. If you can't stomach a drop in Disney, I always tell people to buy a quarter position or a half position, right? Don't put all of your money in. If you got $10,000 that you want to put into Disney, put 5,000 in. Worst case scenario is that it keeps going up in price. And you're like, oh my God, I could have made all this money. Well, 5,000 made money, use that 5,000 and then go buy something else. All right. That has the same type of pattern. All right. So that's kind of what I see with Disney. Let me go ahead and look at SMCI. So Super Micro Computer, very, very popular company, got shot down a lot, right? So during COVID, I wouldn't even say during COVID. Well, during COVID, this stock did extremely well. Even up until about 2024, this stock jumped from COVID, it jumped from $5 a share all the way to 122. That's like you could have made a fortune. Like you literally could have put 10,000 in this company and dang near became a millionaire, right? But it's dropped since then. And when the 200-day is angled down, we don't want to be around. Well, now you see the 200-day moving average starting to angle up, which increases your luck. And you see how the best of the best are starting to buy it at the 200-day moving average. I would use that as support. If you buy it here, I would say my support is right around $40, which is only about 10% from where we are. And for a stock like this that moves, that could be a good, that could be a nice little investment over the next year. But the 200-day is angled up, that'll increase your luck. So I would go for it. Let's look at Amazon as well. Amazon, 200-day is angled up, it increases your luck. It's approaching the 200-day moving average, which is what I like. If it gets down here, you could take a nice little swing trade. Y'all know what I like to see. I like it to hit the 200-day moving average and start to go up and get a 513 cross like right here. This is kind of when Joel would have been buying this particular asset. I don't really like catching a falling knife unless let's say you don't own Amazon yet and you want to put it in your portfolio and you're like, Joel, Amazon does have a little bit of equity in it, right? Thinking like a real estate developer, right? If the highs was 242 and we're sitting at let's just say 22, it's about 10% off from its high. So at least you got about 10% equity in Amazon. Now, Amazon, like Microsoft, just like Google and Apple, they all drop at least 20% once a year. I like to wait for that particular period when the VIX is above 30 or 40. That's kind of when I like to buy my stocks like this. But if you just need to get in it right now, go ahead and take a shot at it. All right. City Light says, hello, Joel. What would be a good buy-in price for Lilly for a 5 to 10-year hold? So Lilly is Eli Lilly, guys. So Lilly, if you're into the GP1, is it GP1? GP1? Yeah, the GP1 drugs that are helping everybody lose weight, they're number one, right? So Eli Lilly, from a chart perspective, and give me a second, hold on. All right, excuse me. All right, so Eli Lilly is 25% down. Now, this is a week chart. So let's look at the week chart is telling you that, the old breakout of Lilly was right around 629. We got the 629, which would have been a really good price. Now, people say, where did you get this breakout from? This breakout came from over here back in January of 2024. Eli Lilly broke out and it hit new highs. That old breakout area is an area where a lot of people like to buy, because imagine if it broke out and then all your friends and family told you how Eli Lilly hit an all-time high. You're thinking to yourself, well, I want that same price too. So a lot of people bought it right around the 629 area. Well, we're at 737 right now. If I was to pull up a day chart, you're going to notice that Eli Lilly had a 200-day moving average that was angled down. So you probably didn't want to be around, which is why I wasn't around in Lilly. But a lot of people took a shot here because it was the old breakout area. Now, me personally, I'm not buying Lilly until I see the 200-day moving average flatten out or go up, because even if you buy it here, sometimes it takes a year or two for this to turn around. And some of you guys, when you guys look at charts, I know what the human eye does. The human eye will say, oh, the old high was 972. See, the chart doesn't show Eli Lilly at $2,000 or $3,000 or $4,000, right? You only see 972. So when you want to get in right here, because I just want to get in before it breaks out, you should be usually when a stock breaks out, it does something like this. You see this big old breakout? It broke out from 629 and went all the way to 972. Guys, that's a 50% return, right? That means it almost doubled, it ran 50% in price, right? So even if it was the breakout here, and go even higher, it might double from there, right? It might go from 715 to 1500, right? So what you don't see on the chart is way up here in the stratosphere, so it doesn't make me waiting look so bad. Just wait, guys, or go make money somewhere else. You don't have to get in. Like, you're not going to miss out. Remember, I catch everything. Even this Oracle. I'm looking at Oracle now. I haven't bought Oracle for ever. I've never bought Oracle. Why am I interested in Oracle now? Because Oracle owns, or it looks like they're going to own, part of TikTok. And if you guys know what I know about TikTok, it's one of the fastest growing platforms that are out there. And they want to be involved in AI. So I want to be part of that, right? So I don't have to get in now, but I can get in when I see a breakout, when everybody else jumps back in, because stocks are at all-time highs right now. We're in a period, September and October, where the market usually comes in on price. So I don't have to buy right now. So in my opinion, if you want to buy it here, great, with your support being 630. All right, but I'm going to wait until it breaks out like this. And when it breaks out with a 513 cross, then maybe I'll get in, because look at what's happening here. If the 200-day is angled down and you don't want to be around, and you see the last time we were underneath the 200-day and we got a breakdown of price and a 513 cross, 1, 2, 3, 4, 5, 6, 7, 8, 9 days, 10, it dropped for about 10 days, which is roughly about 2 weeks. So this could be the beginning of a 10-day or 14-day move to the downside. All right, so be careful. But again, if you're holding it for 5 or 10 years, just like I said before, in the last 5 or 10 years, if you go 5 or 10 years prior to what is 2025 now, if you were to go back to 2020, you can see the types of moves. This is 2022, It came from $250 a share and it's at 700 right now. So, maybe it comes in price, but I don't necessarily have to buy it right there. It might go down for 2 years and then it might spike up for the next 5. So, different strategy. But again, if you want to buy it here, it's 25% down from its all time high. So, at least you have some equity in it. All right. Hold on. I think I missed one. I did. Hold on. Shanika said, "What's up, y'all?" All right. Here we go. All right, Zach. Zach says, "What's up, Unc? Palantir and ACCY for a long term." I think that's Palantir. All right. So let's look up Palantir. So Palantir is one of my favorite companies. It's coming in a little bit right now. I put y'all in Palantir way down here at $12 a share. It's now $179 a share. Send my check in the mail. All right. Palantir is in the stratosphere. Am I going to buy it way up here? Heck no. Am I going to buy this for a swing trade? Heck no. Now, when this thing runs, it runs, right? Just by looking at this, let me take off everything that we see here. And a lot of you guys are having a hard time now because, again, until you understand swing trading versus day trading versus investing, you're going to look at this you're going to look at this chart, and if I say sell or buy or look at what it's doing, you're going to be confused. When you simplify everything and when you have an investing strategy, or if you have a swing trading strategy, or if you have a day trading strategy, you're going to be able to look at this chart and break it down in 3 different ways, even looking at the same chart. That's where I want you guys to get to, right? So I can look at this chart and say, hey, as a swing trade, I'm not going to get in it because it's up more than 10 days. And if I notice here, now when this thing runs, it runs more than 10 days. It runs for like 3 weeks or a month just by looking at the chart. And I can go all the way back to when it first started to get bullish. So if you're ever in this particular company and you're taking profit after day 2 or 3, you ain't looking at the charts. Anybody that's been buying this, and if they got it right and they're up for 2 or 3 or 4 days, they're usually going to be up in the next 2 or 3 weeks because look at the charts. Charts don't lie, but traders do. 21 days, 21 days, right? That's 10. Here's another 10. Here's another, and I mean, it spikes. 10 went flat, then another 5. Here's another, 15 or 20 days. That's another 12 days. That's another 15 or 20 days. Here's another 20 days. Here's another 20 days. Here's another 20 days. Y'all see how just by looking at charts, within 1 minute, I'm breaking this down. You guys are having study groups and going on Reddit and trying to get information from people. Guys, charts are math. What you're looking at right now is math. This is the result of all of that information that went on. Like, I don't have to be part of these different groups. I can just come in here, see if it's biased, look at price action, and see if money's flowing into it, because when money starts to flow into it, this is how long it goes. You guys are doing it backwards, which is why it's so hard for most of you guys to trade and invest in the market. All right. So as a trade, what am I looking at? Well, it's up for 11 or 12 days. So at the most, maybe we get to all-time highs, maybe we turn around. Because if on average it's been going up for 10 to 15 days, and we're 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, we're 14 days in the Palantir. What are the odds of it continually going higher? Maybe another week. So if you're getting in it now, you're getting in it late. So you can make quick money in a day, 2 or 3 days, because when Palantir runs, it runs. Now, if I was thinking of this as an investor, I would say, well, Joel, as an investor, I always want to buy things that have equity in it. Well, you ain't got no equity if we sitting up here at all-time highs. And everything pulls back, including Palantir. When Palantir sells off, guys, it sells off 15, 20, 50%. Every time. 15 or 20%. 15 or 20%. Sometimes even 50%. So why are you getting in way up here? If you know something's going to drop 50%, why am I buying it 10% down or 15% down? Because you're being lazy. Not you, Zach, but the average trader and investor. And that's what I'm trying to teach you guys how to do. You can buy Palantir, learn Palantir's patterns, right? Be a pattern recognitionist like me. And then you can decide if I want to buy it. And y'all see how I'm not pulling up 15, 20, 25, 30 charts? One chart. I'll trade better than just about anybody you ever come in contact with, because I understand that what you're looking at is math. I don't have to put math on top of math on top of math on top of math and make this ridiculous equation that most of you guys can't freaking solve. I want to create a problem that I can solve. If I can't solve that problem very quickly every time, then you shouldn't be using that formula. A lot of you guys' formulas are so complicated. Even the best traders and investors out there are like, what are you like? How are you even? What the heck are you looking at? It's too many combinations. Stop complicating things. All right. But Palantir long term, I would buy it, I would hold it, but I wouldn't be buying it right here. If you're in it, stay in it. I own Palantir. I've sold probably 3/4 of my position, and I'm letting the rest run for the next 10, 15 years, because I think it will probably be $1 trillion company one day. And then ASCCY, is that right? ACC, no, ASCCY. Oh, Asics, the shoe company? They're doing good? Is this the shoe company? Huh. All right, long term, 29,925. It came from, it hit the 200-day moving average way back here at 18, and then it ran to 29, made about a 70% return. If I was buying this long term, I'm going to wait until it touches the 200-day. Now, this is bullish, and it's been bullish for a very long time. I mean, this company's been bullish since 2023. So for 2 years, this company went up in price, and you could have got the best prices. I know you guys are like, oh my God, this is like magic. How come when I pull up my charts, it don't look this simple? How come when my teacher teaches, it's not this freaking simple? Because your teacher probably ain't trading or investing. They making money off of you. 200-day moving average, the most used indicator on the planet. Is the universal indicator that lets you know the bias of the stock. The bias of the stock is up. So you're gonna make a higher percentage on buying things to the upside, but quit buying things at all-time highs. All right, not you, Zach, but anybody out there that's not using the charts to go with the fundamental analysis of the company. All right. All right, Tamika says, thank you for your service. Oh, Jason. Thank you for your service, Jason. NFT Gaming Metaverse says, hello from Finland. We got Finland in the house. In the heezy. All right. A Journey with T says grab stock, long-term investment, vet crypto, long-term investment. Grab stock for your long-term investments, and you want to vet your crypto for long-term investments. All right. So make sure you guys understand that. DK Weddings again says thoughts on utility for income while preserving capital. UTLY. UTLY. Uh-oh. Are you just saying utility companies? Because I don't see UTLY. All right. So I think what you're asking is thoughts on utility companies. So utility companies are going to always, and I hope this is the right answer to your question. So a lot of people invest in utility companies because utility companies will pay what we call a dividend. A dividend is what they pay you to own the company, right? So for example, if I was to a lot of you guys don't know how to find it. So if I was on Yahoo Finance and let's say I wanted to buy a utility company like AT&T, right? Which is T, right? A lot of people will buy these companies because no matter what you do, people are going to pay for their phones, they're going to pay for their gas, they're going to pay for their electric. So these utility companies out there know that this money is coming in, but for the most part, they're not companies that grow in value. So a lot of people love buying companies like this because you can go here and you can look and see what the dividend is, right? So the dividend for T, for example, would be 3.9%. So that's a pretty high percent, right? So that's 4%. That's close to what some of these CDs and bonds are paying on a yearly basis. So if I had $100,000 invested in AT&T, I would get a $4,000, well, $3,900 a year just by owning the company. You're gonna keep your 100,000, and then they're gonna pay you 3,900 on top of that. Now this dividend is paid out 4 quarters. So even though it's $3,900, you're gonna get 1/4 of that every 3 months. Now a lot of people use that as income. So if you're sitting on like $1 million, you could put $1 million in AT&T and make $39,000 a year just by owning the company from whatever price that you bought it. Now, it doesn't take away the fact that it can drop in price, but even if it appreciates in value, which AT&T has, let's say I put $1 million in it when it was $14 a share. Now that $1 million is worth $2 million today, and you making $40,000 on it a year. So a lot of people, once you have a lot of money, I know so many people that try to go this route now, and I'm like, dividend paying companies are cool when you have a lot of money, and if you want to be really, really conservative. But if you really, really want to be conservative, I always tell people to just buy the S&P 500. All right, it offers a little dividend, but at least you'll get that 10% on average growth a year, especially if you're young and you want to be rich and secure one day. But once you have, millions of dollars in your account and you're like, dang, where can I park this money and get guaranteed money? Then a lot of people will go the utility route, especially when the market looks a little shaky. So hopefully I was able to answer that question for you. The BK dot said, I've been seeing CeeLo gains legit. Yeah. They talking about you, CeeLo, and your receipts that you don't show no more. Aaron says, CeeLo inspired me about them dividend stocks. See? So you are getting some inspiration out there, even though from what I see, you were getting more hate than love. But hey. HU? All right. Andrew Willis says, lift for 16 months to 1 year hold, target price 30, options trade. All right. So let's say we were looking at lift. So this is the first options question. All right, so let's look at Lyft. Now I've been buying a lot of Lyft for my kids. So they've been buying a lot of it. Lyft, guys, look at the chart. Lyft has a very, very nice chart. Oh my God. We have what we call a rounded bottom. Now everybody knows that I love a nice round bottom. All right. So if you notice, this is bottoming out. Nice round bottom. Usually when a company bottoms out like that, especially if it's been bottoming out for 3 years, usually you're going to see a breakout, and the breakout is fierce. All right. So it's starting to break out. As you can see, it's higher than the highest price for the past, 3 years. So Lyft is breaking out. And once it starts to break out, it wants to go to the next resistance area. The next resistance area is at like $68. Well, guys, we're at 21 right now. That's a 200% return. And if it goes back to its all-time highs, guys, you're going to make a 400% return. That means a $10,000 investment is going to be worth 40. And if it continues to break out, it can continue to go higher and higher and higher. So a lot of people are getting very, very excited about Lyft. Now, the month chart, the TTM squeeze has not started to go green yet. So still be careful, but it has started to go green on the week chart. And anytime you see it start to go green on the week chart, like down here, that is a very good sign that this company might be turning around. Now, the reason why Lyft is even lifting like this and it has a catalyst is because it just did a deal with Waymo. All right. So we're going to have driverless vehicles, whether you want it or not, whether you love electric cars or not. Driverless vehicles are coming. My vehicle right now is driverless. Every time my friend anytime someone who's never been in a Tesla has gotten into my car, they always say, Joel, can you put it in driverless? So I put it in driverless and they can't believe it. We just sit back and it's turning corners and stopping and going and changing lanes. And most people don't know that every single solitary Tesla that was ever created, except for maybe the Roadsters, have the technology installed on it, but you have to pay to activate what's in it. So anyway, there's a lot of cars out there with a lot of technology in it that you guys had no idea is in it. So Lyft has a deal with Waymo and has a deal with all of these other companies so that when driverless starts to hit, you're going to be able to go into the Lyft app and pretty much get a Waymo. I got into my first Waymo in Phoenix. I was going to the golf course and I said, you know what? Let me try it. It's only like 2 miles up the street. Like, what's the worst that can happen? And it was kind of a weird experience because at least when I was driving my Tesla, the steering wheel was right there. So if anything happened, I can always grab the steering wheel and take over. But when you're in a Waymo, you're in the back seat. So anything that happens, you're just out there, right? So it took me to the course. I called and then it took me back. And that was my first experience with it. And I mean, there's so many cameras on there. What a lot of you guys don't understand, especially when you get into my Tesla, is that it sees more than you could ever see. Like the screen on there shows you just about every single car that's on the road coming forward and back. And with AI helping it, it knows what mile an hour this car is coming this way and that way. It's processing things on a level that we could never get to. So a lot of you guys don't realize that's what's happening in your car. Your car knows what's going on beside it, behind it, in front of it, above it, below it, speed wise. It knows if it's it's calculating all of this information in split seconds, right? So anyway, the moral of the story is you guys should be buying Lyft, right? The charts look good. It looks like it's going higher. Go ahead and take a shot at it. But if we were looking at the options and you were saying options 1 year holds, if you were looking at the options for Lyft, what I like to do is I like to look at unusual options activity. So unusual options activity is when you see options, and I'm pulling up the option chart right now. If I was to go out to September 2000, I'm going to take these shades off. If I was going out to 2026, right, of June, what I like to see is I want to go out and I want to see volume levels that are very, very high. That's very, very unusual. And for now, I don't really see it. You know, not in April. I see some open interest, but I don't see, like, I see 4,000 open interest way out. So, I don't really see anything super unusual yet, but sometimes I'll go in here and I'll see, if anything, I see puts. Like you see 24,000 contracts being open at the $15 level. Sometimes that's just support or an area where they're willing to buy those shares back in case Lyft drops in price. But I don't see, well, I do see 15,000 out here as well at the $30 level. So that might be a strangle or a straddle where you see 15,000 here and then you see 24,000 there. That's mostly a support level. And these look like areas or target levels where they think that this can actually go to. So looking at this particular chart now, this is unusual. You see this 8,000. This is January. There's a lot of unusual activity for January of 2026, but I don't really see anyone going further out than January. There's a couple out here in April. Okay, there's some out here in June, but there's a lot of open interest. But what I want to see is the volume I want to see the volume and the contracts that are being bought. And I just don't see that yet, even though I see the chart looks like it wants to go up in price. So if you want to take a shot at it, even those options out to June of 18,000, June of 2026, it's only going to cost you $480. So even if you're wrong, you're out $480. So you can take a shot at that. And if Lyft goes up in price $40 or $50, right, you're gonna make $100 per dollar move, right? So if it's up $20 times 100, you can make a good $2,000, $3,000 off of this $500 investment. So if you want to take a shot at it, go at it. But the charts do look pretty good. All right. JK Porter says more effective. Yes, that's a good title. Oh, for my pay hip lesson. Oh, we already looked at that one. Still dark in my PJs here in Hawaii. Hawaii in the house. But you're always getting up for us. Is this time to buy XRP based on upcoming SEC rulings? What publications or sites do you track for current stock company info? So what I hate is that Thinkorswim still isn't up to date on, doesn't have the crypto that I like. So what I like to do is if you want to look up crypto, you can go to Yahoo Finance, right? Excuse me. So if I was looking up Ripple, even if I was to type Ripple, right? Let's just see what pops up. You're going to see Ripple USD right here. Now, Ripple is the same as XRP. So if you notice, once I hit Ripple, XRP showed up here. You can pull up Ripple's charts. You can look at the last 5 years, and you can see how Ripple has moved up in price from 62 to 25. But let's look up XRP. Because that's the Ripple chart. I want to see XRP, which is also Ripple, which gives you a better idea of how much you can pay for it. So XRP Ripple, if I was to look at the last 5 years, you're going to notice that Ripple ran from 36 cents all the way to $2.80. All right. Now, I love telling this story. This is the last 5 years. The very first time I ever bought any crypto, guys, and this is what, everybody has that moment where, they catch the bug or they catch the itch and they're like, catch the bug and they're like, all right, I'm all in. And it shouldn't have happened, but it should have happened. So December of, I don't even remember what year it was. Maybe it was 2018. But or 2007. I think it was 2018. December of 2018, Ripple came out, and it was before Coinbase or any of these companies. And I remember buying Ripple for 24 cents. All right, way back in the day. And I bought it for 24 cents. And within 30 days, it went from $24 to $3. So I made 1,000% return. So I put in $500. Within 30 days, it was worth $5,000 in 30 days. Right. The fastest I had ever made 1,000% return on an asset. Now, I've made that all the time in options, but that was the first time I had ever done it that fast in an asset, like a stock, right? So I caught the bug then. I used that $5,000. I spread it over a couple of things. And then at the time, Bitcoin was right around $5,000 a coin. So then I put all of that money into Bitcoin. And then I rolled Bitcoin from 5,000 to 50. So I made 1,000% return. And then I made another 1,000% return. All right. From 5,000 to 50,000. And now I'm waiting for the next 1,000% return for Bitcoin to go from 50,000 to $500,000. Everybody knows this story. So Ripple right now is $2.80. Now, this is what's crazy. Remember, I bought it way back in 2018 when it hit $3 a share. So this doesn't necessarily, oh, it does say 285 here, which really doesn't show you the real price, but the real price was $3 and something cents back in 2018. I don't know why that information is not here, but whatever the case, that was way back in 2000 and looks like 17. And then it took 7 years later for it to come back to these same prices. And now we have surpassed the highs from 7 years ago. But in the last 5 years, it's still up 1,000%. Remember, I made 1,000% return in 30 days. And then it took most people to make another 1,000% return over 5 years. Okay, which is normal, right? Most of you guys don't know that Ripple is $167 billion in size. Let me hide this. So if you look down here, the market cap of Ripple is 167 billion. Most of you guys didn't know that because you were thinking that it was close to a penny stock because it was $2.81 in price per coin. All right. This is what matters. This 167 billion, because that means it still has room to grow to maybe even be as big as Bitcoin. But even if it was to grow to a $1.6 trillion company, which is the size of maybe an Ethereum or Bitcoin, it's only going to go from $2.80 to $28. Some of you guys right now think that this $2.81 share price is going to go to 100,000 just like Bitcoin, because in your mind, you're like, oh, if it equals the same size as Bitcoin, that means the price is going to equal to Bitcoin. That's not what they're talking about, people. They're talking about the market cap. They ain't talking about the share price. And that's where a lot of you guys, even you advanced traders and investors, get this wrong. This is what matters, not this. This is an illusion. Okay. Everything is not equal. Every company out there doesn't have the equal amount of shares that are out there. That's why the share prices are different. But if you add up all the shares that are out there, that's how you get the whole company. Apple issues way more shares than maybe a Berkshire Hathaway, right? So this is some of the things that you guys don't understand when you're coming into the market. You got to understand market cap, and Yahoo Finance is the fastest and quickest way that you're able to break down a company by looking at the things that matter: the market cap, the supply of shares that are or coins that are out there, you know, the 52-week range, right? That's going to give you an idea of how much money you can make in that particular stock. Aaron said, hey, I didn't see too many in the comments, so I decided to add some. You guys wouldn't. Remember, this is being publicized over 6 or 7 different social media platforms. So with this with this StreamYard that I'm using, it consolidates everything so I can see all the comments coming from everywhere. So even if you're on maybe LinkedIn where it's not getting as much traffic, you might only see 1 or 2 comments there. But believe me, there's more than 2 people that are on just by these comments that are coming in. All right. There's over, there's a lot of you guys that are on right now. So I'm seeing it come from everywhere. So just make sure you just type in 1. I didn't mean to beat up on you, but 1 so that I can get to everybody's stock. Michael Myers, Galaxy trade for a year, please. All right, GLXY. So let's go back to the charts and let's look at Galaxy, GLXY. Galaxy Digital. Galaxy Digital is at all-time highs. All right. If you were going to hold this for a year, you can do it, but I don't like buying anything close to the highs. Now, if you're trading it right now, you're in it and it's $32, it's probably going to hit $38 and then it's going to chill for a while. Why? Because it's an all-time high. Okay. Unless it gets a catalyst that can make it go through it. And it happens all the time, right? So that's the all-time high. We're close to it. Joel's not going to buy there. Joel's going to buy it after it falls in price. 200-day starts to angle up. That's the what would Joel do method. And as the 200-day moving average starts to angle up, I'm only going to buy it anytime I see these 513 crosses. Right? I'm going to buy it here, or I'm going to buy it here, or I'm going to buy it here. I'm not going to buy it until I see it sell off. Maybe buy it here. As long as this 200-day is angled up, it increases your luck. I'm definitely going to buy it if it touches the 200-day, especially if I'm holding it for a year. So if it's way up here in the stratosphere, what do you think is going to happen? It's probably going to come down at some point, and it might be within the next year. Sometimes it takes a whole year for a stock to come back to its average price. Remember, guys, the 200-day moving average is the average price of that stock for the last 200 days. This is math. What you're looking at is a visual representation of math. This says that every day at 4 o'clock, I'm going to take the closing price of the stock. I'm going to add it to the previous 199 days. I'm going to divide it by 200, and then I'm going to create a dot. Okay. So you're 30, if the average price is 20, and we at 34, you $14 higher than the average price. That's too high for me. I'm going to wait for it to come in. If I was holding it for a year, you might have to, if you're holding it, guys, it might drop. It might drop 40%. You're 40% away. And so this is what we call a high beta stock. Any stock that can double. Now, listen, this is not only a theory, this is a pattern with stocks. Listen to me closely. Any stock, I don't care, any stock or any asset that can grow 100% in value in 1 year is probably, you got a 90-something% chance that within the next year, it's probably going to drop 40 to 50% from its highs. Not 40 or 50% from where it's at, from its highs. So if it breaks out and it gets to 42, or let's say it gets to 50, you got a 90% chance that within the next year it's going to drop from 50 to 25 before it goes to 75. And then it'll drop from 75 to 38 or 40 before it goes to 80, 90, or 100. And then it'll drop from 100 to 50. And then it'll climb to maybe 200. Then it'll go from 200 to 100 because stocks stair step up in value. Okay. And they stair step down in value, contrary to what your beliefs are, because I'm a pattern recognitionist. And this is real money that's going into these stocks, guys, and real money that's coming out of it. All right, let's look at, GLP-1. Oh, yeah, earlier when I was trying to think of the Eli Lilly stuff, it was the GLP-1. GLP-1 drugs. All right, Snap. 3 years. Okay. So let's look at Snap. Snapchat has not been getting any love. And you know why it hasn't been getting any love? Because look at what the 200-day is doing. The 200-day is angled down. So you don't want to be around. Y'all been trying to capitalize on Snap since 2021 when I told you guys to give up on it. Do y'all ever hear me talking about Snap in the room? Why? Because I'm a pattern recognitionist and I'm one of the best that's out there. When the 200-day is angled down, I promise y'all don't want to be around these stocks because it's math. It means the average price for the last 200 days is starting to come down. So if the average price over 200 days is starting to go lower and lower and lower, not yesterday's price or the day before or the day before, if you add up all 200 days and the average price is starting to go down every day, that's real money, guys. Billions of dollars coming out of Snap. I know you want to use common sense and you're like, but everybody's using it. And if everybody's not using TikTok, then everybody's going to use Snap. That's the operations of the company. You know what? The Snap could be adding more members than ever in history. But if investors are not investing in Snap, it ain't going up in price. And you guys have not been able to separate the investing side and the operations of the company. Y'all think it's all connected. And it is in a way, but it's not. One person can come out and say something good about Snap, and Snap can grow 200 or 300% and didn't do anything from yesterday to today. We've seen Oracle do it. Oracle jumped in price 30%. Guys, a $500 billion company in one day gained like, 200 billion. And I'm just throwing numbers out there, but it was obscene. What did they do in one day to earn $200 billion? It was news related. Investors jumped on it. And that's all that matters. Oh, this is what they're involved in? Okay. The stock goes up in price. Okay. You guys got to understand that they're two different things. So studying it and studying the fundamentals does not make a stock go up in price, no matter how, why it should be up in price. The smartest person is not the smartest person in the world is not going to be the richest, right? It just doesn't work that way. Just because they're smart and intelligent and scored the highest grades at Harvard does not mean that they're going to be the richest. They're smart, but that, it's just not like that. That's why you got your Android people always arguing with Apple products. They're like, Apple products are not as good as Android. Yeah, but the investors don't care. The investors want to buy Apple. So Apple's going to be the biggest company that's out there. And it's going to make Android users mad because they believe if it's the best, it should be the highest price. And that's not how it works in business. All right. So I want you guys to understand that. So Snap, the 200-day moving average is angled down. So you don't want to be around. And it's still angled down. So let's see what's happening right now. It's still angled down. I don't care that Snap just went up because look at what happens every time. Now, if you were in Snap as a swing trade, I get it. If the 200-day is angled down and this is the average, just like a stock can drop from its highs to its average, a stock also can be valued lower than what the average is. So what will happen is every now and then Snap will come back to the average. So if I was a short seller, this is when I would want to short. When we hit the 200-day moving average, if the 200-day is angled down, I'm shorting, and I'm going to make a killing. Well, we short. Look, if you go back and you become a pattern recognitionist like me, top 1%, every time it touched it, we couldn't get higher, and we went lower. You literally could have shorted it at the 200-day moving average and made money for 7 or 8 days. Look, the last 4 times it did it. Money made. Like, oh my God, Joel, it's like magic. No, it's not. You just don't use charts. And what do we just do, guys? We just hit the 200-day again and then we reversed from it, just like the last one time, two times, three times, four times, five. But y'all are complicating things so much because I promise you, if you pull up 3 or 4 other charts, you ain't gonna see it on there. Why is it on this chart and not on that chart? A lot of the times you guys seek out the answer, and what's gonna happen is, you know, if you go search for something, you're gonna find it. And a lot of the times, if you're not a specialist, you're gonna think because you see it on another chart that, oh man, I should have used this chart because it's clear as day here. And then you're gonna keep doing that over and over again, where you're always trying to find the answer. Look, sometimes you just lose. And that's why it's easy for me. Nothing is 100%, right? Every time it touches this 200-day on this chart doesn't mean I'm going to make money guaranteed, but I'm probably going to make money 70 to 90% of the time. There's going to be 10% of the time where you have a fluke and it goes through and it keeps going, right? But if I search for the answer on other charts all the freaking time, you're going to start adding that to your strategy. And then before you know it, you got 15 or 20 charts you got to look at to take this trade right here that you could have easily just taken it on that day just because we touched it, since this is the universal chart. So what do I notice from this chart? It still looks bearish. Do you want to take a shot on this long term, which is what the question was, 1 to 3 years? Well, now I got to change my strategy and pull up a chart that, represents 1 to 3 years, which is going to be your week chart and your month chart. See, I take the information and then I go to the chart that represents that time frame. That's the what would Joel do method. I'm not going to really look at a day chart. All right, because I can confuse you. I've already confused a lot of you. A lot of you guys are like, I ain't buying this because Joel said when you hit the 200-day, it's going to reverse. And it just did it 3 days ago. Yeah, but the question was 1 to 3 years, not 1 to 3 days or 1 to 3 weeks. So by pulling up a week chart, now I can answer my 1 to 2 year question, right? What I do like about this chart is that we're bottoming out. It's bottoming out right here. We cannot break $7. $7. It's been sitting at $7 since 2022. We're at $8 right now. So if you were buying Snap, you got $1 downside for the past 4 or 5 years. That is a great support level. Now, does it necessarily mean that it's going to turn around? Nah, it's been 3 years and this stock has just been going sideways for 3 years. So by looking at that, I have to say to myself, if I buy this stock at this price, am I willing to wait a whole nother year? Okay. If the answer is I need to make money in 6 months because I need this, I gotta be able to pay for this down payment on this house, then Snap might not be the right move for you. And if you want to take a shot at something like this, I'm going to wait until I see a 513 cross just like this on the chart that's representing the time frame that I'm looking at. Because when the 513 cross happened, that's 1 week, 2 weeks, 3 weeks. You did get a nice move in 3 or 4 weeks where Snap went from $10 to about $13, right? $3 move on a $10 stock is a 30% return. I got $100,000 invested in this. I can make 30 grand. And this is what a lot of people or a lot of swing traders will do, even though the 200-day moving average looks a little bearish. Being a consultant, I'm able to look at this chart and look at another chart and break it down versus a swing trader, a day trader versus a long-term trader. And that's what I'm trying to teach you guys to do when you're looking at your charts. A new IPO pattern. Oh, she must have been talking about something we were talking about earlier. And I PTR in, Carrie Ann, PTR in. Oh, pattern group. I don't know what they do. So let's say you don't know what a company actually does, like right now. Like I have no idea what PTRN is, which it looks like it's a new IPO pattern. So I guess it's representing the patterns of IPOs. So if IPOs are starting to go up in value, that lets you know that the economy might be inflating, right? So then stocks are going to go up in price depending on the IPOs. This is what I'm just gathering from what I'm seeing here. But I don't want to just put out information and not know the real answer. So that's when I pull up Ask Joel GPT. So if I was to pull up Ask Joel GPT, I can literally ask it, what is pattern? And let's see what it says. So it's going to say pattern group. What is pattern? Its business model is an e-commerce accelerator. Pattern helps consumer brands sell products across global marketplaces like Amazon, Walmart, eBay by providing infrastructure, operations, analytics, logistics, pricing, and so on. They sometimes buy inventory from brands and then sell through the marketplace. All right. The recent IPO for Pattern went public on September the 19th. All right. The company is valued at $2 billion. That means it's a small company that can grow in value. So I was pretty much wrong in what I thought pattern might be, only from the on what you said, which was the new IPO pattern. So I was trying to put the new IPO pattern with pattern group, thinking that maybe this was a new ETF that shows the patterns of IPOs. Anyway, so I always encourage you guys to do your due diligence also, right? Don't be know-it-alls like me and think you know what the answer is. Let ChatGPT humble you and kind of tell you the definition and how big that company actually is. See, I don't care that pattern is, $12 a share. Pattern could have been $100 a share. What matters to me is that it's a $2 billion company. So when I start doing my breakdown of companies, I usually will take a company like this and then I'll go and see if I can find something that's similar to it. And then I try to find the largest company in that field so I can get an idea of how much Wall Street appraises that company. So, it might be a company that can never break 10 or 15 billion within the next 10 years because of the space that it's in. It might be in a space where the average company is 100 billion in size. That's where you guys do your homework to kind of figure out what a company like this worth 2 billion could grow to in the future. All right. Dang. It must be a lot of questions because I'm answering questions about utility. All right. Utility is an income ETF. I believe it pays weekly. I have to check again. All right. So if utility is an income ETF, that's crazy to pay out weekly. Are you sure it pays out weekly? Because let's ask ChatGPT, UTLY. Is there a company with the ticker symbol UTLY, UTLY, that pays out weekly? Let's see what ChatGPT says. Oh, wow. Yes, there is an ETF, not a company, with the ticker ULTY, which is the Yield Max Ultra Option Income Strategy ETF that intends to pay distributions weekly. What is utility and how does it work? Appreciate it for bringing this up because this is something that I didn't even know about. Utility is an actively managed ETF that uses option strategy, covered calls, and combinations with equities to generate income. In March of 2025, it shifted to a weekly dividend payment schedule. Prior to that, it had monthly payouts as part of its strategy to reduce NAV erosion associated with large lump sum distributions. All right, so yeah, ULTY is definitely a company, and I think I put UTLY, so ULTY. Let's see if we can find its chart. ULTY. And there you have it, ULTY. All right, ULTY was paying out weekly, but look, it looked like it was a what we call a Ponzi. I don't want to call it a Ponzi scheme, but it seemed to be one, right? Because look at the 200-day moving average, just angled down. It was paying you out weekly, but your investment was losing money. I'm going to put $18 into something and now it's worth $5. I just lost 66% of the value of my investment, but I'm getting them weekly checks. Now, if the weekly checks are high, like let's go back and ask, what type of dividends can I expect? What kind of percentage can I expect weekly? So you're going to get paid out about 1%. Let's just say on the higher end, 1% weekly off of your payouts or off of your investment. Now, let's just break down the numbers. If you're getting paid out 1% weekly, that's about 4% a month. That's about a 48% return a year. Now, although 48% a year sounds scrumdiddlyocious, I'm going to break this down in 1 minute. Even though 48% seems great, if you're able to put that money aside, right, it would take about 2 years for you to get the money that you invested in that company out of it, right? So as long as I stay in it for 2 years, I can make my 100% return. So whatever I put into it, I'm going to be able to get out of it. So then maybe after 2 years, me getting that 4% a month, that's when you're going to start really, really seeing money. But I got to wait 2 years to actually be profitable, right? Because when I look at the chart, let's say I started back in 2024, it's 2025 right now, and I put, 100,000 in when it was worth $19 a share. Well, now it's worth $5 a share. That means if I had let's say I had $190,000 invested in this company, it'd be worth $5,000. Is that right? No, 190. Let's say I had 19,000, it'd be worth 5,000. So if I had 190,000, it'd be worth 50,000. Now, if it's worth 190,000, if I put 190,000 in and now it's worth $50,000, I'm gonna be kind of angry. I just lost, or I'm down $140,000. So it's gonna take 2 years to get all of that back, assuming we stay at the same price. So in my opinion, right now it's at $5. So what people always say is, oh, well, it's at $5, Joel. Can it go any lower? It sure can. That bad boy can go to 1 cent if it wanted to. So I always tell people to be careful when they're looking at dividend paying stuff and payouts, because although the numbers seem big and huge, in the end, you still might, you know what I'm saying? It's the law of big numbers. It's like when people put out those big number testimonials, you know what I'm saying, and on YouTube or in the room, and then they try to get you to take, certain classes or use a certain strategy because they see this big number. I feel that way about dividends all the time. I have people come to me all the time and they talk about the dividends forward and AT&T offers, and I'm like, guys, they're probably giving you these huge dividends because if you look at it's just like in real life. The big companies that are out there, the Metas, the Facebooks, the Amazons, the Palantirs, the Teslas, the Nvidias, why don't they offer 8 or 9% in dividends? Because if you've been holding those companies, you'll make 100%, in a year or two, right? So why are we gonna offer a dividend if our company is growing, tremendously over the next couple of years? And with AI coming into the fray, anything that's related to AI or tech, it seems like within the next 4 or 5 years should grow in value. So if you're just a small company and you're not involved in AI or this, that, and the other, how can I compete? Well, I got to offer a big number to try to reel you in, right? So I want you guys to be careful when you're looking for companies like that or looking for dividend paying stocks. All right. That's a good one, though. It's a yield max fund. Yep. All right. So TS says, "Hi, Joel. Can you look at MSTY for monthly income investment for the next 5 years?" All right. MSTY. All right. So if I was looking at MSTY, another yield max. Again, guys, it's the same thing. I promise you, if you were to look at, well, let's look at it on Yahoo Finance. So if I was to look up MSTY, it's going to show you what the dividend chart is, right? So the yield is 179%. All right. So that's huge, right? Because that's more than, right? That's more than what the company, I mean, whatever your investment is, you're going to make over that within the first year, right? So when I see stuff like this, I told you I get a little, concerned. So what I would do is I'll look up the particular company, see how long the particular company is out, look up testimonials to see what's going on with it. But that's 180% yield. All right. Now the company is worth about $4 billion in size. All right. But when I pull up the charts of MS, what I'm going to notice is that you better be prepared to lose some money, right? So you're getting 179%, right? A lot of people, if they were, what I would do, guys, if I'm going to buy something like this, I'm going to wait until I see it bottom out, because the 200-day moving average is angled down. All right. I'm going to wait until I see maybe a 513 cross first so that I can have a nice little support area. So I probably would have been in right around 20. So at least as that money starts to come in, I want to put that money to the side until I'm able to get my full 100% return out of it, or whatever my investment was that I put into it. And then once you're able to take your investment out of it, or you're getting it in the dividend, you're getting it and you're able to take that money and put it out on the side, then you can just let that bad boy run. Sorry about that. You can let that bad boy run forever, right? As long as you're able to get your money out of it, I say go for it, right? But I mean, it's down 6% today, right? So even if it was 180%, let let's do the calculations on that, right? Where's my phone? Uh, Here's my phone. Even if I was to do the calculations on that, which is wild, right? If it was 180%, roughly, and there's 52 weeks, that means it's paying out. It's paying out like 3.5% a week, which is wild, right? So you're making roughly about 12% or 12% a month, right? So you pretty much make your money back 12 in about 8 months. So in about 8 months, 7 or 8 months, you should be able to make your money back. So that's how I would approach something like that. Really, really high dividend, but it's been going down. It's been going down, 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 and not up. Now, if you are able to catch it and that bad boy starts to go up, then hey, you win on both sides. But I always look at the worst case scenario. All right, hold on. Penny said, "Hey, Joel Rodney Harrison." She's gonna say my whole full government name. My bad. I had to step away. Oh, ULTY. Yep, ULTY instead of UTLY. All right. So this, you know why this company is popular, guys? Because this is the company that makes Tylenol. So let's look at KView or KenView. All right. So KenView has been doing terrible even before the news came out about Tylenol. All right. And I mean, this company is at 52-week lows. It's at its lowest price since 2023. 200-day is angled down. 200-week should be, well, the 200-week moving average isn't out there, but everything is saying sell, sell, sell. It's at its all-time low. It's the lowest price it has ever been since it's been public, at least this time around, which is $16.46. Couple of ways you can look at this one. You can say, you know what? Can it go lower? Indeed, it can. I mean, look, it's down 2% today. Anytime people think a stock can't go lower, I've seen it go lower. In my opinion, I don't like catching a fallen knife like this one. I'm going to sit out. Now, I do see on the TTM squeeze, these are some of the biggest bars I've seen. You probably want to check a MACD, a moving average convergence divergence chart, or the RSI to kind of see where those numbers are. Look at its history and see if it's ever been sold off this much. If that's the case, you can take maybe a 1-year shot on it. Like, I can see why a lot of people are buying options on this. So let's pull up the options. So if I was to pull up the options on this chart, I'm going to see, and let's just make sure that's everything that KenView is related to. So let's go to Ask Joel GPT. Actually, that's the oh yeah, let's go to Ask Joel GPT and say, what is KenView? And why is the stock down? And what you're going to see, all right, here's a breakdown of KenView, what the company is and why its stock has been under pressure lately. Well, KenView is a consumer health company spun off from Johnson & Johnson. It owns well-known over-the-counter products, consumer brands such as Tylenol, Band-Aid, Neutrogena, Listerine, Johnson's Baby, Aveeno, and Zyrtec. All right, so it did become a spinoff back in 2023. By becoming that spinoff, you've seen that it's dropped from its highest price, literally from, weeks after it IPO'd. All right. So the stock has been doing terrible. And then you had this ridiculous news that came out from the White House. Now, I say it's ridiculous. I need to see statistics behind it. I've been talking to all of my medical professionals and they all been laughing. Like, look, we know that there's a lot of big changes that happen in the professional and the medical field, but we're not going to make these huge changes until we see the statistics of years of backing, these diagnoses and these hypotheses on what Tylenol, can or can't do. Right. So the news is out there. Let's see the statistics. If the statistics are correct, then you'll see the medical professionals start to make a change. But I don't know anybody that's in science that's going to just make a blatant change of something just because somebody in power says so, without any statistics for everybody to read and see, so that we understand why we're going to make this particular change. And that just hasn't happened right now. All right. So until that news comes out, you're going to continue to see this company fall. Now, if somehow or another the news is false, you're going to see a huge spike in this particular company. So a lot of people are taking advantage of it, right? Now, looking at the options, I still don't see any unusual options activity even going out to January of 2026. When you're talking about a stock like this, usually you want to see like 10,000, 100,000s of contracts being bought. And I just don't see that. I see a lot of open interest in the 30,000 range, but I don't see people just going out and saying, you know what, I'm going to spend $100,000 on this $84 option at the $19 strike, which is only $2.50 from where we at. If this was a sure thing that was going to go up in price, believe me, you're going to see, and look, it can happen. But for now, I don't see it. The statistics doesn't tell me that there are players out there that are making big decisions on Kenvue going up in price, within the next 2 or 3 months. Now, I need to go and do a little bit more history. I'm just briefly looking at, the options charts, but the options charts don't look no different than anybody else's chart. It doesn't look unusual at this particular time. Doesn't mean that I can't be wrong. Doesn't mean that you can't take a shot at it. Right? I've been wrong many a times, right? News might come out tomorrow, and then these, $40 options might be worth 400, right? But it looks like from now, it just doesn't look like there's anything that's telling me to go out and buy, higher dated options on this particular stock. But I could be wrong, I could be wrong. All right. Has the 613 cross changed to a 513 cross? I don't know what that means, but look, guys, anytime you take a lower, so here's the thing. The What Would Joe Do method is just a method that's on a basic, I try to tell people to come in, kind of see what I'm doing, and then you guys can make derivatives of your own, right? I've had so many people where I've shown them how my charts look, and then they'll go in there and they'll tweak their chart a little bit to meet their goals and their requirements. That's what I want you to do. I'm never going to cut somebody's head off for not doing exactly what I'm doing, right? My goal is to make you guys see the market as clear and concise as I do without all the information and all the technical struggles that you guys go through. Because even as an active trader as myself, I don't even use all that crap. And y'all know for a fact I trade better than 99% of the people that are out there just by my receipts and my calls that I've made over the last decade. Now, there's different ways. So when you have when you're using a crossover strategy, all you're doing is you're taking a lower time frame and a higher time frame. Some people use a 5-8. Some people use a 5-13. Some people use a 5-20. Some people use a 10-20. So a 5-13 versus a 6-13, there's no difference. And there are people that will try to sell you on the fact that, oh no, you should use EMA instead of SMA, or you should use an 8-period moving average, but instead of a 13, because the lower number is going to get you in a little bit earlier, right? And this is just what people do to try to sell you on, because it makes a lot of sense, right? You're right. 8 is less than 13, so using a 5-8 would be better than using a 5-13. That makes so much sense. I wonder if Joel knows this. Let's let Joel know that if he used the 5-8, his strategy would be even better. When the fact of the matter is, you just have to be consistent in the strategy that you're using. I'm not going to veer from the 5-13 because it don't matter if I use a 5-8 or a 5-7, right? In my opinion, consistency is what matters to me. As long as you're winning 70 to 80% of the time, you winning the type of money that you want to win in the market, that's what matters, right? I can try to tell you guys pound for pound if you stop thinking about Elon and having feelings about Elon, that Tesla is the best vehicle pound for pound on earth, right? I can argue with you and make a lot of sense if I say, everybody's buying the Cybertruck because guess what? There is no truck out there that has a 0 to 60 in 2.5. And if you can find me anything that's even within a second of that, show me, right? So then your enthusiasts that like 0 to 60s are like, you know what? You're right. That's why you're buying. So I can't sell you on what's better or pound for pound. You just have to be consistent in what you use. All right. So yes. So when you guys are pulling up your charts, the crossover strategy is what matters, right? You need a trigger. You need a bias. You need a trigger. That's part of the What Would Joel Do strategy. A bias, a trigger, and then a goal. All right. That is the fundamental basis of my whole product, of all of my products. A bias, a trigger, and a goal. A bias, a trigger, and a goal. All right. So as long as you have a bias, you have something that triggers it, and then you know what goal you're using, whether it's a swing trade or a day trade, you're going to win 80 or 90% of the time that's out there. Nobody wins 100, even though there's a bunch of super traders out there that will never tell you when they lost, and they never lost in their lives, right? Because they just win, and that's why you should pay $30,000 for their class, because they've never seen a loss, right? But I'm here to tell you that losses will come. It's the people that can handle those losses that win in this particular market. And it's consistency and it's your risk to reward that makes you a winner, not how many classes you take and how much that class costs and how much time you spent in it. Like, that's not what makes you a winner, because people forget that the market is emotional. You got to be able to handle the emotion of the market, the patterns of the market, and then implement your strategies and your goal in the market. And that's where everybody makes the mistake. They can't do all four. They got one down, but they struggle with the other two or three. All right. We have ACHR. So let's look at ACHR. What time is it? 1:30. So I got time for about 30 minutes for more questions. So if there are any other questions that are out there, go ahead and shoot them so I can get out of here by 2. Oh, dang, we've been going for 2.5 hours. No, I take that back. I forgot I started at 11. I should be stopping sometime soon. No more questions. This is the last one. All right, let's look at Archer. All right, Archer Aviation. 200-day moving average is angled up. We got a 513 cross happening right there. If you're in it, stay in it. If you're trying to get in it now, you are late. Now, are you really late? Over here, when the 513 cross went off, it went up for about 15 days. So let's just quickly analyze it, right? That's 10 days. That's 15 days. That's about 10 days, 10 days, 7 days. That's about a 20-day run. So Archer is all over the place. When it goes up in price, it can go, then it'll go flat, and then it has small little spikes. But when it comes off the 200-day, it really moves up in price. So if I was buying Archer, this is when I want to buy it, because anytime it hits the 200-day, if this is the time where it gets some momentum behind it, this is where you can make a lot of money for you options traders that want to maybe take a shot at it. Nothing is 100%, right? That's why you guys need to learn how to be pattern recognitioners. Look back about 2 or 3 years. You can do that with the day chart. Quit flipping back and forth between 7 and 8 different charts. If you're doing that, guys, I want you to start using, maybe instead of flipping, like let's say you are a chart flipper because of some teacher that taught you that ridiculous strategy. I want you guys to bring it down to maybe 2 charts. So you know how I can switch back from a week chart to a day? That's 2. It should be 2 charts at the most. One for a trigger, and then a secondary person that can give you a confirmation. That's it. None of this 3, 4, 5, 7 different chart things anymore. I done seen cats that will go from the week chart all the way down to the minute chart to make a decision. And I'm like, are you serious right now? The week chart got to line up with the month chart. That's got to line up with the 1 hour chart. That's got to line up with the 15-minute chart that's got to line up with the 5-minute, that's got to line up with the 1 minute. And then you take a shot at it. Stop it. Because it's too many combinations. It's no way all of those charts are going to line up for you with you're going to be missing out on so many great trades, right? But y'all do it. So I'm coming to you guys from Decatur where it's greater. Decatur where it's greater. I'm going to go ahead and get on out of here. Again, you can go ahead and, like I said, go to payhip.com. You can find my courses. They're affordable. There's bundle packages. Before you go out there, you take an expensive class. Just learn a little bit from me. I'm just going to teach you because the fundamentals that I'm teaching, you're going to be using in other classes anyway. You hear what I'm saying? You're going to learn the fundamentals. Hopefully that teacher is teaching it. And if the teacher's not teaching it, they should pay me to teach y'all the fundamentals so that you guys, that middle area that y'all miss, at least y'all get that so you understand the advanced stuff. They should pay me for that. And that's my gift to you guys. Learn the fundamentals, then go out there and decide if you want to take these courses or create some complicated strategy. Yes, my one-on-one consultations are hard to book. All right. You do have to get in, and nowadays you got to book 30 days out. Sorry, I told y'all earlier in the year, you better get in where you fit in, because once it starts rolling, you're not going to be able to sit face to face with me, because other individuals are going to get hip to it and be like, yo, this is just the smartest thing to do. Right. So, I'm coming to you guys from Decatur where it's greater. Take it easy, and I'm out of here. Peace.